Good evening and welcome to the ShadowTrader Video Weekly for Sunday, July 15th, 2018. As you may have noticed already, the title of this video is A Flat Top of Epic Proportions. I was actually going to use a snapshot of Kid and Play for the featured image, but then I settled on the picture of the Mesa instead that you see. What the title implies is short-term bearish, but the technical picture is actually long-term bullish. So these are the two dynamics that are at play currently that I want to get into. So let's start with the bullish perspective first, and for that we're going to stay pretty technical. We're just going to stay on this S&P chart. What has happened this week is quite interesting because we had our first lower high after the February-March sell-off here. That was then a double top here where we made the same high, and this week we actually bested that. We actually took that out by a couple of points in the SPX and closed kind of right at it or just above. I'm also noting that very little time was spent between, notice how here a lot of time was spent and here it was just a little bit of time, so the market was strengthening up and getting stronger. It only took a couple of weeks to retest that area the second time, whereas here it took many, many weeks. So that's a sign that the market is actually getting stronger, and we could, believe it or not, actually move up to here. By the same token, if you look at, for instance, NDX, it actually closed at a brand new all-time high. So did NASDAQ Composite as well. So that also kind of all contributes to the bullish background. Now, on to the shorter term, more bearish perspective. In the short term, what I'm seeing is some nuances in the market profile that I think are very, very important to note. We have lots of poor highs here back to back. Notice that what you're seeing here in front of you, this is the last 5 sessions here, which would be obviously this whole week. And notice that pretty much every high is poor, especially Friday. Poor, poor, very poor, right? Notice the 3 across. That's the flat top of Epic Proportions there. There's lack of material excess, only 2 ticks, and lack of material excess here. This one also is lack of material excess. Technically, it's excess high when you have just 2 ticks on top. All right, but notice that of these 5, you clearly have 2 of them that are perfect poor highs where there's absolutely zero excess. So I've talked about this many, many times. This is classic market profile theory. 2 things will happen. The poor highs should be repaired. That means that at some point we should go higher. So don't think of this as a top forever. That's why I'm saying this is short-term bearish, but still longer-term bullish. But the more important takeaway of every poor high is always the counter move, the first move away from it, meaning that generally markets will push away from the poor high. Why? Because psychologically a lot of short-term traders have gotten themselves overly long, and we know they're overly long because every time they come to the high, right, they get up here, they nervously sell. They get up here, they nervously sell. They get up here, they nervously sell. And I call this dynamic crowding the plate. They're all kind of crowding the plate up at the highs. And it doesn't bode well for them usually in the longer term. In subsequent sessions, what happens is usually a liquidation break occurs as those traders are stuck long. They have poor location because they're long up near the highs, and they don't have a lot of conviction. Usually these are the lower confidence longs who are up there stuck and they didn't get paid. Okay, so we're looking for the possibility, not guaranteed, but the odds have increased, I would say pretty strongly, that we could see some sort of liquidation break early next week. We'll see how the futures act Sunday night. I wouldn't be surprised if there is some sort of a gap. All right. Beyond that, I wanted to mention something about what I call the fallacy of poor structure. I had a debate with a colleague about this, and it's very interesting. Notice that this rally began on what is pretty much the ultimate in poor structure. If there was ever a letter P to be had, right, it's a lowercase letter P, it would be this, which was the July 6th rally that sort of kicked this off. It was also the rally that broke us out right here of a 55-point balance area. That, of course, would be this whole area down here. Right? I'm not going to move the chart because it'll disturb my little boxes here. So this 55-point balance here ended up breaking with this P formation. And a lot of people think when they see this P, I got a lot of emails about this, they think, ooh, poor structure, it's going to reverse. It's going to fall back down because there is not much support here in the spike. But this is a fallacy, and it's important to note. And I was certainly not one of the people that was saying that this would would fall down. I was actually bullish at this point in saying that the break out of the balance is very, very key. It's a large balance area that we're breaking out of. And it's important to note that it is bullish. Now, why is it bullish and why is the poor structure not bearish? It is because rallies can and do often start on poor structure. And why is that? For the very simple reason that as probably half the people that are involved in this balance area, and we know it has to be pretty much half the people, think the market is going down, all of them need to reverse their position when the market starts going up. Therefore, it is very common that you could get this sort of structure where a whole ton of stops are getting triggered. Think of how many stops are being triggered here. What type of structure would you expect? Should the market just go higher slowly like this and have a profile that looks like this? I don't think so. It doesn't make any sense. It makes perfect sense to me that the start of a move that's a larger move could start on poor structure. Should we carry this structure forward? Certainly. But at the same time, it makes perfect sense. So this is the fallacy of poor structure. Be very careful. Do not be fooled when you see the beginning of a move on poor structure. It can look that way because it makes perfect sense that the profile would be elongated, skinny, and have single prints in it as a lot of stops are getting triggered and a lot of new money longs are jumping over themselves, jumping all over each other to try and get long. All right? Okay, so that's the nuances there on the profile that I'm seeing. Other than that, basically back to the technicals for a second, I just did want to mention that next week is going to be very interesting with Netflix reporting on Monday. They had horrible news earlier this week, which actually took me out of a really strong long position. I had a great long position that I thought here was looking like it was definitely going to break higher, and then UBS, I believe, downgraded the stock and said, well, it's all, everything's all baked in, the stock's too expensive, and wham, it got hurt. Monday they report. That could certainly have an effect on how tech stocks react going forward, since it is the first FANG stock to report. And also the mighty Goldman Sachs is going to report on Tuesday. And one thing I want to mention about GS, I've been actually stalking GS for a very long time now. And it's just been sort of meandering along and not moving yet. This move down, second move down, third move down, fourth move down. And I think we could count that this would be the fifth move down. I am not an Elliott wave person. I just like odd numbers in the market. Let me just say that right now before I get a million emails about Elliott wave. All right, I do not follow that. Odd numbers are generally how the market works. You have 5 moves down. This should be the 5th move, this little short one here, and then I'm thinking trend line break to the upside, but they're going to report on Tuesday, so let's see what happens there. Best case scenario, as I always say, would be a gap down and then a retest of that trend line later. But more importantly, Goldman seems to be somewhat of a bellwether, at least for the financials, and I think sometimes the market itself, although this has been a market that has been dominated by tech stocks rallying so much stronger than everything else, as we've seen earlier in the video with the relative strength in the NASDAQ and NASDAQ 100. All right, that's all I have for you this week. Hope you enjoyed it. Hope it was illuminating. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.